Please note that this webinar is going to be recorded, and replay will be made available on our YouTube channel for anyone who hasn't been able to attend. I am Cedric Rimo from the Climate Bonds Initiative. I'm based in Singapore. It is my pleasure to welcome you today to this new series of our ASEAN webinar on how to advance the green bond markets by providing support for cross-border flows. We are delighted to have a very distinguished panel with us today. But before I introduce the people who are going to speak, I would like to let Mr. Christian Hübner from CAS Foundation to give a few words, as they have been providing us some support for the work we have been doing on this topic. Please, Christian.
Thank you, Cedric, for the kind introduction. As you already mentioned, my name is Christian Hübner. I am head of the Regional Project Energy Security and Climate Change of the Konrad Adenauer Foundation. And we are glad that we are able to have this kind of cooperation and the ability to support this important webinar series, which is actually the third time we do that here together. The topics are very, very relevant. Climate finance today, green bond markets to support cross-border flows, especially in the whole political environment where we see a lot of countries are going to change their climate targets into carbon neutrality targets. We need more support for climate finance to achieve these goals. Yeah, I would like to thank all speakers again to attend to this discussion, and I'm really looking forward and learn more about the topic we are going to talk to today. And then I give it back to Cedric. Thank you.
Thank you very much, Christian. So it is my pleasure to welcome our panelists to this discussion. First of all, Professor Farhad Tagizadeh Esari, Associate Professor from Tokai University in Japan. He will be presenting us a study that he's been conducting on local currency power purchase agreements with incremental tariffs. He's been doing this research together with Professor Yoshino Naoyuki from Keio University in Japan. Also with us, we have Dr. Han Fu-min, a senior energy economist from the Economic Research Institute for ASEAN and East Asia, with more than 20 years experience of professional life with various international and intergovernmental organizations and a strong focus on policy economies. We also have Peter Dupont, managing partner of Asia Clean Energy Partners. He's based in Bangkok. He has more than 30 years experience developing sustainable energy and climate programs in the US and in Asia. And his role currently is to act as the Asia Regional Coordinator for PFAN, an initiative that is going to present to us as well today to support clean energy projects around the region. And also we have Mr. Juice Sita, an investment mobilization lead from USAID Clean Power in Asia. Juice has 20 years of experience in renewable energy in Southeast Asia, and his experience is very extensive, covering private sector finance and investment, market assessments, and business development. So he has a really hands-on experience in the region when it comes to renewable energy projects. So thank you very much for joining us today. I will now turn the microphone to Professor Farhad to present us his study on power purchase agreements. Please, Professor.
Thank you very much, Mr. Cedric. So good evening, ladies and gentlemen. I'm joining this event from Tokyo. From Tokai University. It's a pleasure to be here today. And so first of all, I would like to express my thanks to Cedric, to Climate Bond Initiative, and also to CAS for arranging this event and also for supporting this study. So I'm going to talk about a solution for having optimal power purchase agreements, because there are several challenges for PPAs, and we worked on this project and we modeled and proposing a solution. So this is a joint work with Professor Naoyuki Yoshino. So this is outline of my talks, introduction, challenges. I will briefly talk about the challenges for development of renewable projects or green projects, and then utilizing the spillover effect for increasing the rate of return of this project, and local currency PPAs with incremental tariffs, and finally conclusion and policy implication. So although during the almost last decade, several green finance tools have been introduced and implemented, such as green bonds, green banks, or carbon taxation that different countries are now using. However, one of the most disappointing aspects of the contemporary global economy is the low rate of investment in sustainable projects, including green projects. So although all countries reached to this agreement Paris Agreement especially, and they endorse this matter that reducing carbon emissions is essential and countries need to shift from fossil fuels to renewable energy projects and clean resources. But in 2018 and 2017, the global investment in renewable energy projects and energy efficiency declined by 1% and 3%. It means new investments. And in 2019, renewable energy investment increased by 1%. It was very tiny increase, but energy efficiency investment reduced. And it's projected that due to COVID-19 pandemic and the global economic recessions and also low fossil fuel prices, new investment in renewable energy projects are expected to fall by 10% in this year. And in new investment in energy efficiency projects declined by almost 12%. So this means that in the post-COVID-19, the topic of green finance is becoming more important even when comparing to the before the COVID-19. And governments need to do, there are imperative policy reforms which are needed, such as regional taxation on carbon, national or regional rules, regulation, and strategies on green financing, supporting policies for facilitating the issuance of green bonds, or establishment of green credit rating to measure the greenness of the project, targeting the energy subsidies, reducing the direct and indirect subsidies to fossil fuels, and introducing various de-risking policies such as green credit guarantee schemes for reducing the risk of investment into green projects. So among these tools, one of the most, a conventional one and very common is the power purchasing agreement, or PPAs, which are a legal contracts between two parties, between the power generator and the purchaser, which are in many countries there are state-owned companies. And this is very common, that the term of the contract, the period, and also the tariffs, these are the points that mentioned in the PPAs. But there are some, there are different types of PPA when we are talking about the investors aspect. PPAs in local currencies, PPAs in foreign currencies, for example, US dollar denominated PPAs, or inflation index PPAs. And so PPA in local currency is a type of PPA which is very interesting for governments, domestic governments, but it's not interesting for foreign investors because of the exchange rate fluctuation. So they don't want to, they would like to, foreign investors are interested in a type of return that can guarantee or that can cover the exchange rate risk. PPA in foreign currency is interesting for the foreign investors because the risk of exchange rate already covered, but it is not attractive for the governments because they need to, it will have exchange rate burden for the governments. And CPI index is almost a new form of PPA that some countries are planning to move to these types of PPA. So, but each of these PPAs have fiscal burden for the government. So in this study, we are proposing a new type of PPA in order to minimize the fiscal burden on the government and at the same time make it interesting for the foreign investors. So before I move to explaining about these types of PPA and the theoretical background of it, briefly I talk about the challenges for running renewable energy projects or green projects. First of all is the lack of long-term financing, because these projects are mainly considering as infrastructural projects and long-term finance is required. Secondly, various risks are associated with this project. Thirdly, low rate of return, although in some green technologies in solar, for example, are now competing with fossil fuel, but generally speaking, green technologies are more expensive when comparing to, for example, fossil fuel projects. And fourthly, lack of capacity in the market actors. Many investors or other stakeholders, they still don't have information about what is green, and it is not very clear for them. So as I've mentioned, various risks are associated: technology risks, exchange rate risk, the conventional risk, the feasibility of the project, and secondly, lack of long-term financing. Because when we are looking at the Asian, because the topic is on ASEAN, Southeast Asia. So in Asia as a whole and also in ASEAN, the financial system is dominated by banks. Banks are the major part of the financial system in this region. Bank resources are coming from deposits, and deposits are mainly short to medium term, 1 year, 2 years, 3 years, or maximum 5 years. So it means if allocating these short to medium term resources for long-term project, it will be maturity mismatch. So this is the reason that maybe banks are not a very suitable source of financing. On the other hand, institutional investors are very attractive for starting their activities in financing infrastructural projects, including green projects. Institutional investors such as pension funds, insurance companies, these are the institutions that hold long-term money, 10 years money, 20 years money. Therefore, they are very suitable for funding long-term projects. So in OECD member countries, institutional investors are almost managing 100 trillion US dollar asset under management. But unfortunately, less than 1% of this amount is allocating for infrastructural project as a whole, and a tiny portion of it is going to green project. And if we want to understand that what is the size of investment required, so this pie chart is showing the share of each of the sector. So developing Asia between 2016 until 2030 requires about 14.7 trillion US dollar investment into power sector, which is the largest share in the infrastructure, and the second share is for the transportation sector. So this shows the importance of energy investment in this region. And among different sub-regions in Asia, East Asia is the largest, requires the largest investment. And after that, South Asia and Southeast Asia, the region that we are talking. Next, I want to focus on this topic, a spillover effect. How can we utilize a spillover effect in order to adopt a new type of PPAs? So electricity tariffs are usually often regulated by the governments. It means not determined by the market. So this means that for private investors, it might be difficult to finance this project because the fee, the price is not determined by the market. So what we propose is to utilize the spillover effect of the power supply in order to increase the rate of return of green projects. So this figure is clearly showing what does a spillover effect means and how to utilize it. So imagine that this region is a region without electricity supply. This is what we have in many developing countries and less developed countries. And the government has a plan for establishing a power project, an electricity project, or a power grid in this region in order to bring power to this region. So power supply to this region will bring economic output, will increase the investment, will bring jobs, employment, and businesses, small businesses, large businesses will grow in that region. And gradually the output of that region, the total production in that region will increase. So this is because of that electricity supply. It's called a spillover effect. This is the spillover effect of the power supply. And due to this spillover effect, then the output of this region will increase, the amount of sales of the businesses will increase, price of property, price of land will increase. Therefore, governments can collect more taxes from this region. This is called a spillover tax. It means increase in the tax revenue of the government due to the power supply. So it means this tax is not directly coming from the central government budget. It is coming from that private investment that brought this infrastructure, and this infrastructure created this impact for this region. So we earlier, it's about 2-3 years that we are working on this area on a spillover effect. And if you are interested to know more about the spillover effect and how to model it and how to calculate it, so this paper is available. So briefly, I want to explain about how to utilize spillover effect in the PPAs and how to adopt a new type of PPAs, which is called a spillover index PPA or incremental PPAs. So imagine the 3 different cases of PPA. The right-hand side is the PPA in local currency for foreign investors. Then this foreign investor need to take 2 types of risk. Sigma U is the different kinds of risk for foreign investor, and sigma V is the exchange rate risk, which is very large for many countries because the exchange rate is fluctuating. So it means sigma V is large for many countries. PPA in dollar, so this means that the government is taking this sigma V, and the foreign investor need to take only this sigma U, which are, risks for the, except exchange rate risk. And this is the PPA for local investors, because local investors are not taking sigma U and sigma V. They are taking other risks, which is not in this figure. And we modeled it. Very briefly, I'm explaining it. Sorry that these are theoretical parts, but I'm explaining it in a simplified way, that this is the utility function of the investors. PPA, or the tariffs, which is the main source of revenue of the investors, and the risk. So these are the 2 components of the utility function. And alpha shows a portion of the investment of the foreign investors into local currency PPAs, and 1 minus alpha shows the share of investment into projects that have foreign, US denominated PPAs. And then PPA in the dollar, as it is clear, 2 types of risks are here. This is the exchange rate fluctuation, and this is other types of risks. So it means these are 2 values that needs to be considered. And local currency PPA, US denominated PPA. For this case, the VT is equal to 0. It means no exchange rate risk for the foreign investors. And for the, there is also some cases that governments are providing investment guarantees that guarantee the political risk or other type of non-exchange rate risk. So then in that case, U is becoming 0. So what we are proposing is this, that from the year T0, it means year of completion of the project, and when the project is going to generate electricity, until T1, governments provide a fixed tariffs, fixed feed-in tariffs. And after that, when the spillover effect, when the taxes that governments can collect from that region due to this spillover effect, when it surpassed these tariffs, then governments gradually increase the tariffs. And governments can allocate, for example, 50% of this spillover tax for supporting the PPAs, and 50% can go into the central government budget as a revenue for the government. The red line shows the actual PPA, because it will take some time, 4 years, 5 years, 6 years, depending on the project, till it has that economic impact on the region. And until that time, governments can support these types of fix. Maybe it asks that how this spillover effect is increasing the output through two ways. One way is the direct impact of the power supply, because power supply is considering as a type of a production, and therefore it is considering in the GDP. And the indirect way is to increasing the marginal productivity of capital and marginal productivity of labor. So it means it is also affecting the productivity of capital and labor. So this is considering as the indirect effect or the spillover effect. And then DT shows the increase in the tax revenue from the government. Small t shows the tax rate and tax ratio. And DT is DY is the increase in the output. For example, this is a proposal that we have that 50% goes to PPA and 50% goes to the government. And this figure shows the gain and loss of government due to these incremental PPAs that we are proposing. In initial stage, red hashed lines shows the government loss, because the spillover effect is very low, but governments need to pay this horizontal red line. So this part shows the government loss, but gradually it is increasing, and then governments also can gain from this matter. And this green part shows the actual PPAs that foreign investors are receiving. Another suggestion that we have is that it is possible to implement incremental PPA with cap. It means increasing up to a ceiling, and after that ceiling, it became constant. Then in a case of this cap, the size of this part is also calculatable, and we can calculate the gain of the government. What we find is that the gain of the government is more than the loss of the government. Therefore, these types of PPAs doesn't have any fiscal burden for the government. Even governments can gain from this tax revenue. And finally, it mentioned that what is the advantage of these types of PPA comparing to inflation index PPA? Because several countries are now studying inflation index PPA. What I can mention is that incremental PPAs can be even more attractive when comparing to inflation index PPA, because inflation is a part of this spillover effect. And totally, these types of PPAs have less burden on central government budget, more investment incentive for the government, for the private investors. And here it shows that how inflation is a part of it. T is the nominal tax revenue of the government due to this spillover effect. And nominal spillover effect is this Y, and nominal spillover tax. And then if we get the gross rate of it, it shows the left-hand side, gross rate of nominal spillover tax revenue, gross rate of tax rate, and then the inflation rate. So it means that the inflation rate is a part of this increase. So therefore, it means these types of PPA can be even more attractive. Let me conclude my talks and provide some policy recommendations. So too much reliance on overseas finance will create future burden for the countries. too much creation of external debt will lead to very risky situation for developing economies. So many Asian countries experienced it already during the Asian financial crisis. Circulating domestic saving to domestic investment and maximizing non-debt financing are keys. Lack of long-term financing, existence of various risks, low rate of return, and lack of capacity on the market actors are major challenges for development of green projects. Institutional investors such as insurance companies and pension funds are potential long-term investors into green infrastructural projects. Utilizing tax revenue by use of a spillover effect of green power supply is a suitable source for financing PPAs. Allocating 50% of the tax revenue originated from the power supply and adopt incremental PPA is a suitable policy for bringing private investors into green projects. The spillover effect of power supply will gradually increase. Hence, governments should guarantee the fixed tariffs in local currency in initial years of the project. And when the spillover effect surpasses the fixed effect, then these types of tariffs, which are incremental, could be adopted. And these are the reference of my talks. And thank you very much for your attention.
Thank you very much, Professor Farhad. This is very interesting. It is really an issue. I think we see a lot of growth in the market of renewable energy, but we sometimes forget the potential that it represents for transforming the economies. Professor, there is a question on the chat room about whether this would apply also for private off-takers, because you're explaining that it's possible for a government to levy extra taxes as a spillover effects, create value in a region. But what about private off-takers?
Yes, thank you very much for your question. So in our previous seminar that we had, I think it was 2 weeks ago during the ASEAN Climate Finance webinar series. So it was a good presentation by colleagues from T6 Fund. They talked about the investor side and very good solutions. For example, the CPI index PPAs that several Southeast Asian countries are now studying about it, and they are shifting from dollar denominated. So in this research, we are looking at the government side, because for the investors, the best case is to have a dollar denominated or a foreign currency denominated PPA, because they don't want to take any risk. But governments also need to consider their side. So issuing lots of foreign denominated debt will create future burden for the country. So ultimately they need to pay, and then it's a huge burden. So in this research, we are looking for a solution on the government side that not just considering the benefits of the government, but also the interest of the investors.
Thank you very much. I will now turn to Dr. Fu Min. You've been an observer of energy policies around Asia for a number of years, and you've been pretty active in the region in specific countries. What is your comments on Professor Farhad's presentation, and do you agree with his observations?
First of all, thanks so much, Frederick, I think, for this opportunity for area to participate. And also thank for Professor Farhad, I think, to provide a very good study, I think, for particularly for what kind of model that can make the renewable investment, particularly on with the power generation or others, become more attractive to foreign investors. I think the study give a model to be simplified. What kind of model that could, I think, you call to say that de-risking. Another word is to hedge the foreign currency exchange that may not be attractive enough in terms of cash flow for the investor. I think that clearly highlighted by Professor Farhad. In that, I think the solution he suggests several models. That the first, I think, when the government provide fixed tariff rate with the feed-in tariff or whatever, but a certain period of time, I think when the spillover tax could generate, then the government could use some of those to offset some of to make the currency on the foreign exchange, to make the, I think, project more attractive, to minimize the foreign investor risk. I think that one of the attractive case study to say that because renewable to some extent still more expensive, you need to support to one way or another. So I think the model also is quite new. I think using economic spillover effect by enhancing their employment and other. After that, you generate tax and get that tax share between municipality, government, and also subsidize to the foreign investor. I think that very attractive. Or other model, I think Professor Fahad introduced to be simplified. It may also can apply to private off-taker to some extent. Just correct me, Professor Fahad. If second option, you said that to allow the tariff to be flexible over time by adjusting with inflation. In that case, I think when the tariff becomes flexible, it means tariff very progressive. In that case, I think it not only take the over the inflation itself, but actually you can actually increase the tariff cost rate to actually to use that as the mechanism to hedging your exchange risk for the foreign investor. So I think the model is quite very nice to me, very flexible, depending on how you look at it. But I think this is all what Professor Fahad want to say, and then also that the renewable investment, particularly, it still have barrier because most of the funding, basically, because you don't have large funding available. If you go to bank, I think they have they use deposit to loan those back to the private builder developer. In that case, I think the green bond become very attractive and new financial instrument. I think, but the developing country, basically regulator and bank, local municipality, they really do not know yet how to operate, what actually guideline need to be in place. And we said, why the local regulator not jump in? When you jump in, unless you understand the mechanism, how it works. If you don't know the mechanism, how it works, I think you cannot jump in. When you jump in, you have to jump in with commitment to make it implementable. Whether the bank going to, let's say, issue the green bond to get investment on that. But that local bank in developing country, emerging economy, they do not have ability to really monitor those kind of assurance. A second, regulator itself do not know how to operate, how to oversight, not only provide the framework. I think to some extent, the central bank and other need to have a very top knowledge on how this green bond going to work. I think this is lacking in terms of how it's going to work in many of the ASEAN countries, except I think country like Thailand, they are starting, Malaysia, I know, Indonesia, where I'm living. I think they pretty much bank, which is still by big bank with the capacity they can do. But to my understanding, it gradually, if you want to get this work like the policy that Professor Fahad present, going to be rolled out, I think that's important to get first information across how this is going to work. That's the most important. I stop here and take question and answer later on. Thank you so much, by the way. Yeah.
Thank you very much. But actually, when we look at the green bond issuance in Southeast Asia, renewable energy is a big part of the types of projects that are being financed. So it seems to be, in effect, proving that it's quite interesting for some projects to finance that way. But I would like to turn now to Peter Dupont. Peter, you have been active for, I think, the last 12 years in this space in Southeast Asia. Do you have observations about what has been presented? And after that, maybe you can present us with your initiative.
Okay, so is my audio on? Is that working?
Yes, we can hear you well.
Great, perfect. So I have a couple of comments on, on PPAs and Dr. Farhad's suggestion, and Dr. Pumin's response, and then I'll just briefly, about 3 minutes, just talk about the work we do at PFAN to develop projects. So I think first thing, I think it's a really good idea to look at these options, and thank you, Dr. Farhad, for the very detailed presentation. We've seen a trend, and I think Joost, who's coming up from Clean Power Asia, would probably attest to this, towards more competitive auctions. So there will be fewer PPAs in the future, and the PPAs will probably be shorter duration. So that whole dynamic is changing. I mean, EGAT now, the Electricity Generating Authority of Thailand, has about a 50% overcapacity. And they're talking about moving to 7 or 8 year PPAs. Okay, these are just press reports, but the long-term ability of utilities to commit to 15, 20-year PPAs will be diminished.
Sorry, Peter, what do you mean by overcapacity?
Oh, well, the reserve margin of EGAT. So EGAT's total demand now, probably today, it's a cool day, it's probably 28,000 megawatts, and they've got over 50,000 megawatts of capacity.
But they could reduce the generation from fossil fuel and switch to renewable energy still, right?
They could, but they have a lot of long-term commitments through PPAs, and that's the point, right? So it's harder to enter into long-term PPAs. That's one point. And especially, so there's this thing going on, the CLVT interconnection, the Cambodia, Laos, Myanmar, LTMS, okay, Laos, Thailand, Malaysia, Singapore. And so that is sort of a test interconnection of trading between countries. And so far, there's some power, like 100 megawatts, is being wheeled from Laos through Thailand to Malaysia. Singapore didn't want to join because Singapore also has like 100% extra capacity. In other words, they've got the number of generators they have is twice what they can actually accept in the market. So the more that these power interconnection agreements take place, the harder it will be to enter into longer term PPAs. That doesn't mean that what Dr. Farhad said is not important. In fact, it may make it more important for the ways that PPAs are used. So if it would be helpful, so those are my comments. That's sort of some context to provide. And I can very briefly talk to you about sort of the landscape of getting these projects financed. Is that okay, Cedric?
Yes, please do so.
Okay, so I'm going to just take 3 minutes and talk about the work that we do with the Private Financing Advisory Network, which is UNIDO-led initiative to help small and medium clean energy projects get financed. So essentially what the PFAN does, and PFAN stands for Private Financing Advisory Network, is serve as the missing middle, helping the projects who have really good ideas but may lack some financial and commercial skills, helping them connect with and get financing from investors. And I'm going through this quickly just to get the basic idea, and it may be a point of discussion later. So PFAN it's a global program run by UNIDO, but it's essentially it's a network of advisors. So in Asia, we have 23 advisors in Southeast Asia and 21 advisors in South Asia, so about 44. These advisors are experts in finance, climate, and clean energy. They're essentially coaches. And the coaching is provided free of charge through donor funding to the companies. Now, so we work through these private sector advisors. The advisors get a fixed fee. So the companies do not pay anything. They get free coaching services. And The funders, you can see at the bottom, are Sweden, Australia, US, Norway, Japan, Germany. And essentially, the idea is you put $1 in of donor funding to support coaching, and you can generate $40, $50, $60 on the investment in terms of closed financing. And I'll come back to the PPAs in a moment, Dr. Farhad. This is just sort of our experience over the last 12 years. So we work with all sorts of projects. 95% of what we've done over the past 12 years has been in the energy sector. We're broadening now to cover climate adaptation and climate resilience. That's not the topic of today's webinar, but obviously CBI works a lot in the outside of the energy space as well. So that's of interest. I won't go into that now, but just to say, so we've coached about 600 projects or so, and 150 of the projects that we've coached have been able to get financing of about $1.8 billion. So what that means is that with a little bit of input from a seasoned advisor, these projects that often need a little bit of help to refine their business plan and develop an effective approach to investors are able to get financing. So our success rate is about 20%. I wish it was higher, but it's not bad. We're able to help a lot of the companies close financing. And I would say, Dr. Farhad, that really, I don't know what the percentage is, but it's a very, very, very high percentage of the projects that we get financed are bankable because they have PPAs. And it might be a PPA in agriculture, but an offtake, but they have some sort of long-term offtake agreement. So what we're working on now is 94 projects across the Asia region. This is just the Asia region. Globally, we're working on a lot more. And then, in terms of, Cedric said he wanted to sort of give an idea of what's going on in renewable energy. Well, we debated early on how wide, should we have focus on like hydro and wind? We just leave it open for everything, and we get pretty much everything. Obviously, solar is big. Waste to energy has come on strong in the last couple of years as a bunch of barriers have sort of been overcome in getting those types of PPA agreements done. A lot of mini hydro, energy efficiency. Notice here there's very little wind, and that's because the wind projects are bigger. They don't really need our help. So we're helping projects that are mostly in the $1 to $5 million. This is the investment ask. Okay, so really our sweet spot is the projects that are seeking, say, 1.5 million of equity and 3 million of debt or something like that. And then we do some bigger ones, but the bigger ones, really big ones like the large wind energy farms, they don't usually need our assistance. So that's, if I could sort of generalize on this last slide, this is sort of who we are, our network. I just say it's a lot of hard work to get these projects in, to get them financed, and to figure out the best strategy for them to access. Initially, it's usually equity, which will free up the debt. And we are very interested.
How critical is it that the PPA is correctly structured to ensure the success of the financing of a renewable energy project, would you say? Because this is the topic basically that we are trying to.
So no, that's a good point. So without a PPA, I don't think we've had any merchant power projects financed. So I'm not, like my previous comments were not like, fine, you don't need PPAs. My comment was mainly that the way power is procured is changing. And so if there is not a PPA or there's a shorter term PPA, there has to be some sort of assurance, some sort of offtake agreement. And, I think Cedric, we have been talking, we will continue to talk about like the projects that we are developing that are finished their Series A and maybe Series B and maybe ripe for issuance of green bonds. I mean, that is something we'd like to talk to you more about to refinance. But, in terms of the PPA, it's almost impossible in the current climate to get long-term financing for a project that doesn't have a PPA.
And what about dollars versus local currency? Are you able to draw any conclusions from?
Well, no. I mean, India started a way of indexing, between U.S. dollars and Indian rupee a few years ago. I'm not sure how that is going, but it's factored in, and the cost of capital right now without a local currency is several points higher. So it's a significant problem, because the PPAs almost always are denominated. Usually, I'd be interested to see what Joost has to say, because he's been working heavily in Vietnam and some other countries. So he might have more sort of up-to-date information about what he's seeing. Because I understand that the PPAs in Vietnam were very sort of favoring, were sort of not internationally bankable. And so ADB, Asian Development Bank, came up with a product to cover part of the risk, but not other parts of the risk. But look at what happened in Vietnam. They had 4,500 megawatts of solar installed in a little bit over a year, because they basically, set the rules and they left it open, and all the investment came in.
Thank you very much, Peter. So it's indeed a good time to turn to Joost and maybe get your perspective on. You've been working with your team. I think you're based in Bangkok, and you've been involved in most of Southeast Asia in terms of trying to fill the gap, in a sense, of where you can get clean energy projects up and running. So can you please give us your comments?
Sure, happy to. And thank you for inviting me to join this panel today. Maybe a minute about our program. USA Clean Power Asia is a 5-year program to promote investment in renewable energy in Southeast Asia, funded by the US government and implemented by Apt Associates. We work on the one hand directly with governments in the region to help them, develop incentives for renewable energy, or to set targets for renewable energy. And then on the other hand, the team that I'm leading works directly with the private sector, helping companies to, obtain financing, structure finance, identify partnerships, etc. So we work directly with several companies. A lot, like Peter was commenting, is in Vietnam, because that's where most of the action is right now in terms of renewable energy in Southeast Asia. Listening to Dr. Farhad's presentation, first of all, I'd say it's very interesting to look at the impacts of electricity that provides, and the economic benefits, and governments can look at that more broadly and not just think of, okay, what are the fiscal implications of PPAs, etc. In practice, I don't know how hard it is to model that, and I'm not familiar with studies like that. There may be ways to do that. I agree with Peter. There's issues that affect the bankability of PPAs. We've seen that clearly in Vietnam, that when they first came out with the model PPA about 3 years ago, international investors were all saying, oh no, this is not working for us. This is not bankable. And that definitely means that long-term finance is an issue. And companies have been very creative in trying to overcome that hurdle. But it adds to the costs, the complications of financing these projects. I should say that the issue whether the PPA is in local currency or dollar dominated is not the only issue with the bankability issue for the Vietnam PPAs. Other, if not more important factors are that the termination clause is not very favorable to investors. There's compensation equivalent to like 1 year revenue of the PPA. If you enter a 20-year PPA and there's a risk that after 3 years the utility terminates that and you get a 1 year compensation, that of course is not working for most people. And curtailment is also a very real. It's not a risk. It's really happening that because of transmission issues, projects get curtailed and then earn a lot less revenue than projected. I'd like to make sure I understand the model that Dr. Farhad was presenting. Maybe you can go back to that slide where you show the graph with the different. So understand, you're comparing a fixed feed-in tariff payment with a gradual increasing payment. Is that the issue, that the payment to the project in the beginning is actually starting from zero and then gradually increasing?
Yes, exactly. Because the spillover effect is coming with some lags. So it means when we have the power supply into a region which was not electrified before, immediately it doesn't have economic impact. It will take 3 years, 4 years, 5 years, depending on the region, that it shows that spillover effect. So until that time, government needs to support. Then gradually, when the spillover effect surpassed that fixed PPAs in local currencies that governments are providing, then they can use that sources. They means governments. Governments can use that sources for supporting these PPAs and incrementally increasing the tariffs with this spillover effect.
Okay. I don't think that would be very attractive to a private investor to start off with a low tariff with the idea that once the economy starts developing, there will be a higher tariff, because it basically means that you're putting the risk of the economic development happening or not to the investor, who are have no control or influence over that aspect.
But the issue is that these could be calculated, and governments for example, when governments are going to announce a project for the private investors, they can announce that, for example, in the 4 years, this is the fee, this is the tariff, and in the 50 years, it will be like this. So it means everything is clear, and it is not unclear for the investors.
Right. Okay. Okay, that's good to know. At least if there is a clarity of what it will look like, that will definitely help. Investors like predictability in these kind of projects. It might be an issue in terms of financing. I don't know how bankable it would be, because debt financing payments are fairly high upfront, right? Typically for the first years, you're basically only paying interest to the bank, and then gradually they'll be paying off the principal, etc. So the returns come much later into the project. So that could be an issue too. But again, PPAs in the region are there are different models, and I think we see, even though a PPA is not ideal, there is a lot of interest and it shows there's definitely appetite for investing in these kind of projects. Overall, I'd say the regulatory framework in countries is the issue, right? The ability to actually do a project and sell to somebody is what's holding it back right now, right? In Thailand, there hasn't been any real PPA. There's been some smaller programs for community solar and biomass, etc. But there haven't been any gigawatt scale PPAs given out, and that's maybe the biggest issue these days. Peter, and the question that came in alluded also to private PPAs. I think that's definitely a movement we're seeing, and that's only becoming stronger, I think, because of the push from the corporate sector to want to procure renewable energy, and they'll start choosing countries where they locate their manufacturing and industrial facilities, etc., dependent on the ability to actually procure renewable energy. And Thailand is I think an example where the government may want to start looking at that, because the there is a risk that companies will decide to go elsewhere, maybe Vietnam or the Philippines, because of this issue.
And Jules, can I ask you a little bit of perspective? We are starting a new decade fairly soon. How does the renewable energy space look like in Southeast Asia? Professor Farhad was alluding to the fact that it's still relatively small amounts of investment that are going in. Would you say that we will be seeing an acceleration, or that the barriers are still relatively, too high to prevent such an upswing?
It depends. I mean, like I said, the regulatory framework drives that, the ability to develop a project and to sell the output to somebody, whether it's a corporate buyer, whether it's a utility. And, I think in a lot of countries, we've seen boom and bust cycles where, the government opens the window and issues PPAs, and the private sector rushes in both locally and internationally, and then the window closes, and then, okay, it's waiting. And sometimes, these gaps can be fairly long. In Thailand, it's been a few years. Vietnam is in the last weeks of its solar scheme, and nobody knows what's going to happen after December 31st.
What about Myanmar? Have you seen the tender in Myanmar is a sign that even countries that are less developed are also coming to the fray, right?
That's true. Yeah, and there has been definitely a lot of interest in that too. Comments. We haven't been involved or directly working in Myanmar, so I don't know much about it. But I understand the way it has been designed has not been ideal. Initially, companies had a month to submit bids. There was a requirement actually to secure the land when putting in the bid, which is of course a difficult thing to do, especially in these times too, because people couldn't travel to the country to actually secure that. But again, the uptake was high, and I think the private sector wants to invest in this. Is if the ability is there, people will move in.
Thank you. Dr. Phu Minh, what is your expectation for the next, let's say, the next 10 years in Southeast Asia? What do you think will be the strongest driver in shaping energy policies, and in particular for renewable energy projects?
Thanks, Cedric. I think the driver has to come from the regional and local government commitment toward clean energy or to cope commitment. So I think without such very strong commitment, I think you lack of supporting demand. I mean, demand of renewable had to be created in each of individual country of ASEAN. To get this renewable happening by itself, the cost is very high. If you ask investors to look into attractive project by itself, they will not place their money into renewable, because the rate of return from that compared to other option of investment, they will not put to risky projects with, let's say, renewable solar investment in Vietnam. What I understand from George recently, that I think there are a lot of curtailment happening. You see, all such kind of thing is affect the cash flow. It also affect all the rate of return. So I think that the government have a central role to create demand for the renewable. Look at European example. They really create government framework, create demand. It's mean regulation driving toward banning other polluted energy thing, and then they push thing toward the renewable. That is, you create demand. Once you create the demand, I think there's a lot of interesting thing will come, because policy regulation will support. I think awareness will be there. Besides that, I think the commitment of the developed country like OECD and other, besides that, they have kind of dedicated fund or some kind of fund which is supporting developing country to do kind of clean or renewable project. in that case, if the demand is there, I think then everything will happening. Because if to get the project happening by itself, like Professor Fahad want to explore model to ensure that a renewable project are attractive to investor. I think one way you need a subsidy or support one way or another from the government or cross subsidy. I think that model, I to say to some extent, is very attractive from the start. Otherwise, you cannot, renewable project is not attractive. I think this is one of rather than conventional feed-in tariff, where the burden put on the government side forever. I think you're able to leverage some of the, but someone has to be on top and have able to assess that well. Otherwise, I think something going wrong and it affect all the cash flow and calculation. Because if how the spillover effect from the providing electricity to town or remote area, and until what time they able to generate spillover effect from tax, and then how you share the benefit between provided the risk, minimize risk to foreign investor as well as share these tax revenue with local government. I think it's a very good model to some extent. If I put that in a very simple for the study look complicated to some extent because of calculation. He like calculation, I like simplify. That I think make it become very interesting. Such study I think need to be encouraged. And I would say that ASEAN government need really come together and to drive this, because at ASEAN level, they already commit 23% of renewable share in primary energy mix. But how to do that, I think still a big question because country go by its own. I think there need to be internal push toward how you're going to achieve that 23%. Yeah. Maybe we can take more questions. Thank you.
Thank you very much. Peter, you have something to add?
Well, I think it's a super interesting question. And, Dr. Fu Min's remarks sort of are on target in the sense that what's the risk of investing in renewable energy? Well, I think the biggest problem is who is going to take the risk. I mean, Dr. Fu Min made a point about the government can't take all the risk. This is a question. Who is going to take the risk of a 20-year PPA? And why would you invest at today's price when you know the price of renewables 10 years from now will be 70% less? And then, no one is willing to take that risk. And so as a result, I mean, I'll give you an example. So we're talking to, you have these perverse things, Cedric, where because the so I refer to what's happening as policy intermittency, and Joost talked about this. So, 8 years ago, Spain had a big feed-in tariff and everybody went to Spain. And then they sort of boomed and bust. And then they came to Asia, right? And then they came to Thailand, and Thailand was overpaying for its PPAs. And now they went to Vietnam, and it's like, when will this stop? So because the governments are afraid, like Thailand, I mentioned this earlier, has 50% reserve margin. They can't, the reason, Joost, that they can't invest in more PPAs is they don't have money. They don't need it, right?
At the same time, Just was saying that some corporations now want to procure renewable energy, and therefore maybe it goes away from government and more into the private sector.
Yeah. So this leads to my next point, which is the perverse unintended consequence of behind the meter direct PPAs. So we're working with this company. It's actually a Spanish developer who came to Thailand in 2012. He learned all his tricks in Spain, and he's doing quite well. He's working with Decathlon and some other big corporate PPAs. So their cost of electricity from EGAT, from the Thai utility, is 3.6 baht, which is about 11 or 12 cents. They're entering into contracts to provide long-term power at 2 baht. Okay, so that's about 6 cents. They can do that all day. They keep doing that. The utility will have less power. The utility, it's a really bad cycle. So I agree with Dr. Fu Min that there needs to be a way to create demand for renewable energy so that developers have some sort of long, at least medium term offtake, right? What does that look like? What is sort of the guarantee? You can't say we can curtail you whenever we want, or we can, cancel and we'll pay you 1 year. So this is a fundamental, this is just a problem in the market. So I'll mention one thing, Cedric, and probably I just mentioned this as an example of something practical that ADB, or Asian Development Bank, is doing. They did a study of ways that the utilities in Thailand could recover some costs from behind the meter, all these payments behind the meter. So basically, Thailand has not pulled the trigger on the feed-in tariff because they're afraid that once they do, then they'll have a lot of people just putting solar on their factories and selling into the grid. So they'll have to, they don't need that more power now. But the ADB model that the consultants came up with is having the utility basically pay a fee, which essentially the fee for using the grid as a battery, right? So there is some utility, if you have a feed-in tariff, everybody like puts solar on rooftops and injects it to the grid, the utility should get a fee for that. So that, the really hidden thing behind all this is how the utility, continues to pay for the basic infrastructure. That has to be covered, and you can't. So right now it's just a disaster because everyone is just going away from the utility, doing it behind the grid, and no one's willing to pay for the basic maintenance of sort of the distribution and transmission.
But isn't it what Professor Farhad is trying to solve? Because essentially he's proposing that we get away from a PPA that is fixed at a point in time and linked to future benefits as well, which is kind of linking it to an economic value that is going to accrue in the future. So it's, interesting point that you're raising about the fact that the utility has a role to play. But it's really about accounting for this extra value that new sources of energy are bringing to the system as well, isn't it?
Yeah, I agree. It's a very creative and thoughtful approach.
Thank you very much. Professor Farhad, we probably will finish with you. In terms of future developments, obviously your model is quite theoretical and it needs to be looked at from the point of view of implementation. What is your sense in terms of engaging with governments in the region and how receptive they would be to considering these kind of models?
Thank you very much, Cedric. So first of all, I'm grateful to Dr. Fomin, Dr. Peter, Mr. Jose for providing very, valuable comments. And I wrote all of them. So I will use all these comments for, revising this work, as now we are in the stage of writing a paper out of it. And also, so definitely I will use all these comments. And secondly, the idea of the spillover effect, as Dr. Peter also mentioned, we need a solution that can reduce the burden on the government budget. And as we are seeing from the reality that governments are shifting from the long-term commitment. So therefore, I hope that we can implement these solutions. And I hope Dr. Fomin can help us to propose these solutions to ASEAN governments, government officials, and I hope it be implemented and it be useful for expanding and for unlocking the private investment into renewable projects in ASEAN.
Thank you very much. It was a very interesting discussion. I would like to thank you, all of you, for joining. Jose, Peter, Dr. Fomin, and Professor Farhad, thank you so much for your time today. We wish you a good end of the year, and hopefully this will continue and we will discuss further in the future. Thank you very much. Have a great rest of the day. Bye-bye.
Thank you.
Thank you very much.